Hi traders, Nathan Bray here from ACY Securities. Having a look at a trade that we entered around the 6th of September on a gold against the US dollar short trade idea. So let's go in and have a look. It's triggered me out last night. So thought it's a good opportunity to do a quick review to see how these trades go over the longer period of time than just jumping in and out in a day or a few days. So you'll see here it's up on FinLogix. FinLogix are where we can put up lots of interesting trade ideas, and this was one of them. So you'll see we have a triple top scenario forming. So this is where I put up the trade idea as a potential trade sell up around 1830, about 1833, looking for a move down to about 1790 and potentially lower. So let's go in and just see how it worked out. So I'm going to show you here the technical stuff I talk about today. By all means, jump in and learn from Duncan Cooper, our resident guru. He'll go through it with you, but you'll see where I've got this blue rectangle here. That's where price was. And I was looking for price to fail at this triple top. You can see it topped up here, bounced up here again a couple of times, and then it's had some big moves down too, okay, from that level. My target, how did I get my target? Well, around this 1723.24 level, previous support formed again. We had a big breakthrough here, but then the buyers jumped in and we're seeing that as good value, bought it all the way back up to this same level. So around here is where I was looking at that saying, well, if the buyers are going to jump back in there, then, you know, I'll look at potentially getting into this short side trade and maybe taking some profit down there. So let's just see how it played out very quickly. This is on the daily chart. This is gold versus the US dollar. So you can see here it starts to fail, and I might look at an entry point there and say, oh, okay, what am I risking? Well, I'm willing to risk perhaps up to about, you know, from 1833 up to around 1850 or a fraction above. So I'm only risking about sort of $30 perhaps on this particular trade, with the target going all the way down to about $100. So it's a good risk reward trade. So we'll see how it plays out. Gets up to this entry point there. Price really sells off. The sellers have jumped in and price started to move down. The key things I'm looking for is getting risk out. Once I get whatever whatever my risk on the upside is, if I get that on a short side, then I'll take risk out of my trade to break even and let it play out. What I noticed though is we get these lower high type scenarios. That's very encouraging. And I'll use things like Fibonacci retracement. Say in this case, I think we've got a couple of 50% retracements, which keeps you comfortable when price is going up 50% and then failing there, so that you're confident in that particular trade. And as we're moving down to last night, it hits that 1723.24 level and just automatically, while I'm asleep, takes me out of that trade. So brilliant trade on the short side of gold. Keep in mind, I'm a bit of a gold bug, so I'm utilizing the short side potential profit there to be able to use that profit to buy back in perhaps at a lower level. And you can see last night, it's taken us out and then a huge move back up to around 1750. So those of you who got into gold last night on the buy side, down at major support, so you can use major support and major resistance for your levels. We've got a perfect double top sort of forming down there. So you can use that maybe for a buy side, as well as you can use major resistance to short and make profit on the sell side. All right, that's all from me. I'll check out gold for you for potential buys later in the week. Thank you.